Welcome back to the channel, Barry Charles. In this episode, we're going to look at 3 ETFs you could consider buying in 2023, depending on your risk tolerance and what you're looking to get out of your investment. So first off, why should you buy an ETF? Well, pretty much ETF is an index fund, but it's more affordable. So an index fund, for instance, let's have say you got 500 stocks in the US stock market, and you get an average return of all those stocks put together. So, for instance, if you want to buy into an index fund, though, you often have to pay 3,000, 5,000, 10,000, depending on the index fund, in one go. You can't just buy a little bit. And that's where the ETF was invented, so the people just starting off can just buy an ETF for just $1 or how much money you have. So ETF is an easy way to invest. You can set it and forget it, and when you come to retirement, you'll be hoping that you are on your way to financial freedom. Now, let's have a look at the first ETF on this list. VOO. Now, this is a Vanguard ETF with the S&P 500 total index. Now, why would you want to buy into this one? Well, first of all, if you look at the performance over the last 5 years, you have 100% improvement on your money. So an annualized return of 20% a year. So for someone who's just puts in $100 and just lets their money keep on growing, within 5 years you made it 200. And if you put more and more in, you can just see how your gains keep going up and up and up. Now some people say that's not great, but hey, for someone that doesn't even have to think about going into individual stocks and have to actually research companies, this is perfect for those people that just like to relax. And that's why this video is about ETFs, for people that want to more passively invest. Also, the expense ratio is very, very low, or 0.03. So this is a good one to buy. Vanguard, very good ETF if you're looking to make a buck. Now, why is it a good ETF? Let's have a look at the top 10 holdings, and this will give you an idea. Got ExxonMobil at number 10. Obviously, this one's a bit of a up and down commodity all the time, depending on the price. But obviously, you can always rely on this one at the moment. It's not always a super big winner, but it's still around. Then going into number 9 on this list is obviously Johnson & Johnson. All your cleaning supplies are covered. And then you go number 8, United Health Group. This is a stock I used to own, but I sold way back a few years ago. If I kept in it, I'd be making money. But hey, you learn. Number 7, Tesla. It's only 1.5% of this ETF. So the total weight of the ETF is 1.5%. So if you like Tesla, you got them. Number 6 and number 4 are Google Class A and Class C shares. So obviously if you're into your Googles, you would love to be a part of this ETF. Number 5 on this list is Berkshire Hathaway. Obviously, the man himself, Warren Buffett, the king of investing in most people's eyes. He knows how to value invest. You got to stick with him. Number 3 is Amazon. Amazon's the top 3 holding. And then the top 2, absolutely smash it out of the park here. Microsoft at 5.5% and Apple over 6%. So just in those 2 stocks, it's nearly 12% of the whole ETF. Now, what are the worries about the Vanguard ETF? Obviously, there's a lot in technology. So if technology fell over the wayside, which is highly unlikely, but we have seen the biggest crash in technology since the dot-com bubble in 2000. So anything can happen. But the VOO ETF itself has been a performance king for the last 5 years. Will it continue? Time will tell. I think it's going to be a little bit stagnant for the next year or so. but then expected to jump up. So it's going to be an interesting move. So maybe a good time to buy into this ETF. Number 2 ETF on my list. This is for all you high risk people out there who would like to really get into it. Arkk Investment, ARKK Innovation ETF. Now, obviously, for the people that know Cathie Wood, you can read it all over the YouTube. So many people talk about it, into Tesla, into Bitcoin, into everything. But what has happened to the stock's performance, the ETF performance? Well, if we look at the performance, we've had a very, very bad time with this ETF. Down 65% year to date. So obviously the higher Bitcoin, and then poof, as soon as Bitcoin went off and so did the Arkk investment. And even in the last year or so, really, it's not been a good one. It's not been a good one. And even in 5 years, the rate is minus 14.9. So for a risky investment, you lost 14.9. Some people say it's not too bad considering. But 5 years to lose money, it's not a good investment. Could it be a good investment now if it's been so low? That's the question you've got to ask yourself. Obviously, but it's a very high expense ratio of 0.75. So to me, that's like, why would you even bother? But for some of you out there, you might think, yes, Arkk investment is right for you. And also it gives you a dividend, a slight dividend of 2.35. Not too shabby, so maybe it's something you'd like to invest into. But yes, let's have a look at the top 10 holdings in this ETF of the Arkk Innovation. Well, number 10 on this list is Teladoc Health Incorporated. Then number 9 is Intellia Therapeutic. Number 8 is Unal Software Incorporated. And number 7 is UPath Incorporated. 6, Shopify in this. An interesting one. I wouldn't expect a Shopify to be in this one, but hey, it's in this one. Number 5 is Block Incorporated. That has a 5.5% rating over the whole ETF, so that's quite high. Then you got 4, Exact Science Incorporated. Number 3 is Roku Incorporated. It's 7.46. And then obviously number 2, Tesla. I thought it would have been number 1 at 8.6%. But this is probably the biggest why this ETF is so down. It's the highest rating, number 1 holding in this one is Zoom Video Communication Incorporated. Now this one absolutely skyrocketed through the pandemic and has absolutely crashed down to earth afterwards. So obviously that is why the stock is down big with a over 8% holding. That's why it's dropped very, very big. Very big, just because of that one stock right there. Yes, so for me, Arkk investment is not for me, but I can also see a 50% uprise in the next couple of years with this stock now. There's obviously chances it's not. It's highly reliant on, will Zoom come back to life or is Zoom finished? And you got Tesla. Tesla's obviously going to keep growing, but it won't grow at the rate that they used to grow, so that's another question. Can Roku help them out? But when I look at the rest on this list, I'm not convinced. I'm not convinced any of these stocks are really going to set the world on fire. So that's my question for that one. Now, let's get to the last ETF I'm going to talk about in this one. And this is for all you Aussie viewers. The SYI, SPDR, High Dividend Yield ETF. So for everyone out there, full disclosure, I own this ETF. This is not financial advice, but this is just giving you an idea of how I invest. And why I invest in this one is for the dividend. The dividend yield at the moment is all over the show, depending on what price you buy. It can be 10% to 15%. But I just like that opportunity to invest, and then I can reinvest those dividends into my individual stocks. Now, why I do that? Because you can't always have money around. But if you're getting money coming from dividends, it's an opportunity for you, not using money that you've invested, and you can put it into stocks you like. So that's where dividends are healthy. But dividends generally don't make you as much money as you would in individual stocks, but that's for another video. But back to the ETF. The performance of this ETF has been pretty solid, nothing great. As I said, I'm not investing in this one because I'm expecting it to grow to the moon. I'm investing in this one purely for the dividend. But you're getting, in the last 5 years, about a 6% average growth rate. And in the last year, about 9 or 10. So this one's, and obviously this one is into Australian stocks, so mainly. So let's have a look at the top 10 holdings here with SYI. So number 10 on this list, as we look at this list here, is JB Hi-Fi. And a big shout out to my brother in New Zealand. I'm just about to say Australia. He works in the North Shore Management Office, and he does all the stock. He's the leading man for the stock intakes and travels all around the world. So big shout out to him. Number 9 on this list is Metal Linked. Obviously, I missed out a bit there, guys. Sorry about that. There's a stock here, number 8, Forgish Metals. So obviously this is another one. So there's a lot of metals, and as we continue on, we've got Medibank Private. So we're looking more into the private sector here. Then 6 is South 32 Limited. Number 5 is Whitehaven Coal. So now we're starting to look at the energy side of things. So a lot of people might not like this ETF because maybe in the long term it's not the greatest, which is also my concern. But I just love the dividend yield currently. Once I see this dividend yield disappear, that's when I will sell out. But at the moment, the dividend yield is probably going to get higher and higher at the moment. And I'll keep doing that till I believe it's time to get out. Yes. Also, yes, as we continue on here, the major ones here, we've got Wesfarmers is number 3. Number 2 is BHP Group, obviously one of the biggest known companies in Australia, and Rio Tinto is the number 1 on this list. So to sum up these, number 1, the Vanguard VOO. To me, it's pretty much your stock standard. Sit back and relax, don't do anything, and watch your money grow. The Arkk Innovation ETF, I think you can make a lot of money in a short amount of time. And this is probably a good time to buy and wait for it to go boom. But very high risk, this is what I'm saying. It could keep going south and go out completely. But if it did go boom, you made money quickly, sell out. It's the only way I would look at investing. So, and then you got the dividend side here with the SYI and the Australian dividend. So if you want to say use all 3 as a portfolio sort of thing, how would you work this out? Well, to me, I would go 60% in the VOO. This is your stock standard. I'll put 30% in the dividend, just to give you that dividend income so you can invest into whichever one you like. And then put 10% in the Arkk one, just in case this one goes to the moon, because if it goes to the moon, that will absolutely outperform the other 2, which is again 50-50 if it's going to go up to the moon or continue to go south. So if you're looking at just Arkk itself, you're expecting Zoom, you're expecting Tesla to continue to grow profits. Will they do that at a fast enough rate to really go for it? That is highly debatable. But anyway, that was my go at the ETFs. I hope you enjoyed this video, and I'll see you in the next one.